Private Limited Company Ltd. Your stylish business suit. Hey there, future business mogul. Ready to level up your entrepreneurial game? Let's dive into the world of private limited companies Ltd. The perfect blend of flexibility and protection, like a business suit that's both sharp and functional. What's a private limited company all about? A private limited company Ltd. is a business entity that's separate from its owners. Yes, it's like having a business alter ego. This separation is key because it gives you that sweet, limited liability protection, meaning you're only on the hook for what you've invested in the company. So your personal assets, they stay yours no matter what. The key features of a private limited company: separate legal entity. And Ltd. is legally distinct from its owners, meaning it can own assets, incur debts, and even get sued, all in its own name. Limited liability protection. Shareholders' personal assets are safe. You're only liable for the company's debts up to the amount you've invested. It's a nice safety net for those who like to sleep soundly at night. Share structure. Ownership is divided into shares, making it easy to transfer ownership. Just remember, these shares aren't traded publicly like those in a public limited company, PLC. Perpetual existence. The business lives on, even if shareholders leave or pass away. This means you can plan for the long haul without worrying about the company's future. How to set up a private limited company? Choose a unique company name. Step 1. Pick a name that's all yours. It has to be unique and follow the naming rules, like avoiding anything offensive. Register with Companies House in the UK. Next, you'll need to fill out a form, IN01, with details about the company's directors, registered office address, and share structure. Prepare the key documents. Memorandum of Association. This is a legal statement signed by all initial shareholders agreeing to form the company. Articles of Association. These are the written rules about how the company will be run, including how directors are appointed and how decisions are made. Pay the registration fee. There's a small fee to register, which can vary depending on whether you file online or on paper. Receive a certificate of incorporation. Once your application is approved, you'll get a certificate confirming your company's legal formation. Think of it as your business's birth certificate. Why choose a private limited company? Limited liability protection. This is the big one. With your personal assets protected, you can take business risks without putting everything you own on the line. Raising capital. And Ltd. can issue shares to raise funds from private investors, giving you the cash to grow without losing control of your company. Perpetual existence. Unlike sole traders or partnerships, your Ltd. can keep on trucking even if you step away, ensuring stability and continuity. The not-so-fun parts. Complexity and cost. Setting up an Ltd. is more involved than becoming a sole trader or forming a partnership. There's more paperwork, and it comes with higher costs due to legal formalities like drafting articles and memorandums. Regulatory compliance. Once your Ltd. is up and running, there are ongoing requirements like filing annual accounts and returns. It adds a layer of admin you'll need to stay on top of. Disclosure requirements. And Ltd. has to make certain financial information public, which means less privacy compared to unincorporated businesses like sole traders or partnerships. Case study. The rise and fall of TechGiant Ltd. Let's break this down with a real-life hypothetical example. TechGiant Ltd., a tech startup that rocketed to success before hitting some major turbulence. The rise. Innovative products. Two university friends with a passion for tech founded TechGiant Ltd. and created groundbreaking AI software that transformed customer service automation. Attracting investment. By forming an Ltd. and issuing shares privately to angel investors and venture capitalists, they raised enough capital to fast-track their research and development. Professional management. Incorporating allowed them to bring in top-tier managers, boosting efficiency and strategic planning compared to their earlier, more informal setup. Market expansion. With the funds and resources, they expanded internationally and quickly captured a significant market share. The fall. Corporate governance challenges. Rapid growth led to internal conflicts between founders and investors over the company's direction, disrupting operations. Regulatory scrutiny. As they expanded, they faced more regulatory challenges, particularly around data privacy, critical for an AI company. Financial mismanagement. The fast-paced growth strained their financial controls, leading to cash flow problems that ultimately shook investor confidence and sent their share price tumbling. Lessons learned from TechGiant Ltd. Strong governance is crucial. Clear roles and responsibilities are vital to avoid internal conflicts that can derail growth. Compliance matters. Scaling quickly across different regions requires robust frameworks to handle regulatory risks. Financial management is key. Maintaining healthy cash flows and keeping investor confidence high is essential for sustainable growth. Is a private limited company right for you? If you're after the perfect mix of flexibility, protection, and growth potential, a private limited company could be your ideal business suit. But remember, it comes with its share of responsibilities. Ready to see if a public limited company, PLC, might suit your vision even better? Let's explore that next.